Did you see that little smirk on the face of 2022 as she gave us just one last gift before she walked out the door? In the last 2 weeks of the year, rates jumped from 6.125 to 6.54. I mean, 2022 will go down in history as one of the worst years ever for mortgage rates as it relates to the rate at which the rates spiked. But maybe, just maybe, it's the bill coming due. And by bill, I mean the mortgage and housing market party coming to an end. Hey, this is Chris Sonnenschein with eXp Realty. In this video, I will do a recap of the year and a bit of a foreshadowing of what's to come in 2023. But before we get started, please like and subscribe to my channel so you do not miss out on all things real estate and all things living in Sioux Falls and our wonderful surrounding communities. The average Sioux Falls home appreciated 15%, hitting its peak in July of 2022, and gave back 8% of those gains. Home sales exploded into levels we haven't seen over the past decade, with 5,500 units sold in both 2020 and 2021, dropping the three-year average to 5,200 homes sold per year, which is still well above the 2017 to 2019 average of 4,700 homes sold. Rates plummeted to all-time lows and stayed there for such a long period, longer than any period in history. So where do we go from here? Well, it's not going to get any worse. Rates hit their high and they came back down. Inventory locked up, sales dropped, and demand is still pent up. But there is a path from here. New cycles in Q1 will pick up. Year-over-year comparisons will look worse, but pay close attention to the trends. I mean, really feel the boots on the ground. Pay close attention to inflation, job loss, and interest rates. When inflation continues to come down, and it will, and supplies loosen up, and inflated wages are curtailed by job loss, rates will come back down below 6, and the mood will change. 2023 will be a renormalizing year. So let's break down home prices, inventory, mortgage rates, and demand. Home prices. Those markets with the greatest amount of appreciation, coupled with an abundance of new construction, will likely see the greatest correction. Now, I believe that inflation has hit its peak both locally and globally. We will see rates start to stabilize and demand pick back up, but not yet in the first quarter of 2023. Buyers will come out and take advantage of seller credits and discounts, thereby lowering the price slightly. And in Q2, we'll see prices start to flatten out and turn up for the second half of the year. Now, this is all assuming that inflation is in fact curtailed and the rates do come down into the 5s. 2023 overall appreciation will be in the low single digits by year end. But remember, 2019 appreciation was just 2.5%, and that was a really good year. Inventory. While mortgage rates were the topic of 2022, I believe inventory will take a front seat in 2023. The inventory at the end of 2022 is 920 homes for sale. While that's lower than where we were in 2019, it is more in line with the year-end number of homes for sale between the time span of 2014 and 2019. Now, the difference between then and now is the average mortgage rate between 2014 and 2019 was 4%. Not the 2.75% low we hit in 2020 and 2021. 24% of all mortgages are locked in at a rate below 3%. Another 41% of mortgages are locked in at rates between 3 and 4%. And keep in mind that 38% of all homes, well, they don't even have a mortgage. So 65% of all mortgaged properties are locked in at a rate lower than what we're likely going to see in 2023. Now you couple that with lower permits and starts, Low inventory will be what supports home prices as mortgage rates begin to fall. Sellers, i.e. would-be buyers, will put their home on the market. If they choose to test the market by overpricing, the days on market will go up from the 71 days on market in December. But if they're aggressive, understanding that the market has shifted, they may see multiple bids and quick sales. On average, those homes that had to drop their price, they stayed on market twice as long as those homes priced right the first time. Mortgage rates. While lower interest rates may not be the cure-all for everybody, it sure is for us. I mean, to see rates spike into 7.25%, it sank the hearts of would-be buyers and kept buyers and sellers at a standstill for 2022. Rates did correct a little bit to the low to mid sixes. I'd love to say that we're going to go straight to 5, but I don't believe that to be the case. It won't be a straight line, nor will it be quick. However, rates will respond to global economies, the GDP, inflation, and employment. I do believe we will see consistent rates coming in at 5.5% by late spring and early summer. Demand. The largest age group is now 32 years old, having just seen a calendar turnover. The average age of the first-time homebuyer is 34 years old. That means we have years of pent-up demand. These buyers were priced out and then feared out. They simply want to own. They simply want a chance to create wealth that only real estate provides for most Americans. But affordability will continue to be the limiting factor. As rates fluctuate, buyers will continue to react. When the rates dipped in November and early December, we saw 7 straight weeks of buyers slowly creeping back into the market. But in the last 2 weeks of December, when the rates came back up to the mid-6s, so went the buyers from just 2 weeks prior. Now, buyers will continue to have strong negotiating power and less competition. That will begin to evaporate when the rates drop below 6 and more buyers come back into the market. While I want to tell all buyers to jump in now, I do want to express a little caution. A buyer today is looking at the long-term benefits of owning a home, the lifestyle, the stability, and the protection a home provides. Yes, real estate will always increase in value, but for now in the short term, we may see a little more price instability. So my advice, buy when it's the right time for you in your life. Make sure you have job stability and a little money in the bank, and then go in with confidence, knowing that the Sioux Falls market will continue to provide long-term appreciation and a great place to live. Well, that's a wrap for me. This is Chris Sonnenschein with eXp Realty. If you liked the content of this video, again, please like and subscribe to my channel so you don't miss out on all things real estate and all things living in Sioux Falls and our surrounding communities. Chris Sonnenschein, it's my pleasure to keep you informed.